Welcome back to Trade 360. Time for our 360 round. We're focusing in on China stocks on our radar. Alibaba, namely in focus with earnings out today. For insight, I want to bring in our panel today. We've got Olivier Blanchard, Research Director, Futurum Group, and Melissa Armo, founder and owner of the stock Swoosh. All right, shares of Alibaba under pressure today, down more than 7% at the moment, off the back of their latest quarterly numbers. They missed on revenue. They did beat on their bottom line. Converted to dollars, 96 cents a share. Revenue, $14.15 billion. Again, miss on that top line. Melissa, I want to get your reaction first to their latest numbers for Alibaba.
Well, Alibaba to me looks like a short today. Gap down, it's selling off. This stock has been falling really since 2020. I mean, that was the last time that the stock made brand new all-time highs. So it's really hard to think about buying this, despite the fact that the report could have been worse, I guess, when you look at it. But I think a lot of what's going on right now with the trade war with China and the US is problematic, both for companies in the US like Walmart, which we saw had earnings today, and that was down, even though that's rallying. That's a much stronger chart and a much stronger stock than something like Alibaba. So I think things could get worse before they get better for Alibaba.
Okay. Olivier, do you share similar views? I mean, look, obviously, if we look at it longer term, the chart for Alibaba doesn't look good if you take it out that long to what Melissa's point is. But year to date, and even with today's move, you've certainly seen some outperformance. What's your reaction?
Yeah, hey, Diane. Yeah, I sort of agree with some of it, not the entire thesis for Alibaba. I think that obviously there's a lot going on. It's been a tough quarter. I think we're looking at a lot more uncertainty in the market between trade wars, between the macroeconomic conditions in China, and Alibaba has a lot more competition than it used to. So there's a lot of things that it has to adjust to, and it doesn't happen overnight. I think what I do see though is it's a little bit of a mixed bag. I think yes, they missed. JD didn't, right? One of their competitors.
Right.
And I think that you kind of have to see how their competitive postures are going to help all these companies gauge the quarters ahead. But I'm moderately, or at least cautiously hopeful in the Chinese economy, not going downward just yet and maybe holding off. I think that Alibaba has definitely taken advantage of some subsidies, like a lot of its competitors. It's been pushing a lot of lower prices, which of course is eating into its margins. But it's a good lever to pull when you need to in the short term. But I'm also really hopeful about what it's doing in tech, and specifically with AI, which I'm sure we're going to dig into in the next set of questions. But lastly, what I also like about Alibaba is like a lot of these tech companies, they're diversifying and expanding into different markets. And so when I see them growing in markets like Turkey and other parts of Asia, I can look at macroeconomic conditions and opportunity beyond just the Chinese economy, sort of like acting as a brake on Alibaba.
Yeah. Melissa, Olivier made a great point about JD, but today's results from Alibaba are having a knock-on effect to JD. That stock is under pressure, down 4.5%. Not as much for PDD, parent company of Temu, Pinduoduo. But when you look at the performance year to date, Alibaba has outperformed JD year to date. Still, both sides, to your point, Olivier, have had to rely on some subsidies, some discounting to drive demand. Do you like JD better, Melissa?
No, I like that worse, actually, because
it's all bad. Go ahead.
Sorry.
It's okay.
That's another one that is very far off the highs, and obviously Alibaba is more well known, and the share price is actually holding up a lot better, in my opinion, when you look at the chart. But both of those charts are in a downtrend. Again, if you're coming off a very bullish period, which we had in a lot of markets actually across the board, when the markets globally rallied after the recovery, after COVID, 2021, 2022, 2023, when you're looking at rallies after that, coming off of a very bullish period, and then coming into 2025, where we're getting into a global trade war, the way that stocks are acting right now is extremely important to me. based on, you look at the stock, you look at the other things in the sector, and then you look at the overall market. So what I'm saying is, if you're coming off of the very bullish period, which we are globally, even in China over the last few years after the COVID recovery, and the stocks were nowhere near the highs even after the recovery. If things get worse before they get better, like I said, and the China trade deal with the US does not happen magically in 90 days, then again, these stocks could be much, much lower. Alibaba could break 100 and JD certainly could go down to the $29, $30 area.
Oh, okay, Olivier, I want to go back to the point you were making about AI and cloud growth, especially as it relates to Alibaba. So you did see, I mean, look, that was a bright spot for Alibaba. They've been making some investments on that front. You saw cloud revenue rise 18% year over year. That was faster than the previous quarter. That growth obviously driven by the AI-related adoption. What about that do you like?
I like their approach to AI, and specifically their the way that they're training their QN3 model, which is equivalent to not like the leading Chat GPT and Claude versions of LLMs, but fairly close enough for the types of applications that it needs. First of all, it's an open source model, which is kind of nice and useful and more approachable. Two, it's small and medium sized models, versions of this can be run on much smaller GPUs that coincidentally are not affected by export controls. And so I think it gives an on-ramp for Alibaba to develop this cloud platform and to be successful with it by virtue of the fact that it's not only good and portable, but it also sort of like circumvents some of the export friction that other cloud companies might experience. So it's a smart move, and obviously the market is reacting positively to it with this growth. I think it grew 13% year over year in Q3. Yep. So we're seeing that expansion of that market. So something's working there, and obviously in the age of AI, that's going to be really important for them.
Okay, so that component is working. We'll have to leave our conversation there. That's Olivier Blanchard, Research Director, Futurum Group, and Melissa Armo, founder and owner of the stock Swoosh. Our thanks to both of you. Got green on the board. Dow higher by about 0.25%, up triple digits. The S&P 500 also higher, approaching a gain of 0.2%. NASDAQ 100 on the plus side as well. Thank you so much for joining us today on Trade 360. I'm Diane King Hall. Download the free Schwab Network app. It is available in the Apple App Store. Tune in 24/7 on schwabnetwork.com. Stay with us. You got Fast Market with Tom White and Kevin Hincks up next.